it means the race is still on and that there hasn't been a determined winner. One of my big themes has been this: it's not zero sum. There's so many people out there. There's the Nvidia bulls that think everything's going to be Nvidia. And then there's been those that are like, oh, custom. It's going to be the chips that are made by Google, their TPUs, or it's going to be Amazon and its Trainium chips, or it's going to be some version of that by Broadcom. And then there's the others. They're saying AMD is going to come in the market and outprice. And I mean, if there's nothing that we learned over the last few weeks from this kind of energy capacity trade, you've heard these names like Cypher and Iron. There are these companies that are bit miners that have turned into GPU capacity. And of course, Nebius and Core. We don't have enough compute. We don't have enough energy. We don't have enough compute. And basically, Sam Altman seems to be hedging. He's hedging. He's doing deals with Broadcom. He's doing deals with AMD. He's doing deals with Nvidia. And so everybody's in the game right now. And as long as we know that the compute capacity requirements are going to keep growing, all these companies that are playing have a great opportunity to see more upside.
So this is the moment for AMD to really challenge Nvidia's dominance?
This is a complicated deal if you look at how it sits compared to NVIDIA. So NVIDIA wrote a check. NVIDIA wrote a check and said basically, and of course, no specific round tripping. It didn't say you had to buy NVIDIA, and everyone thought, well, okay, it's a circular thing. And now you've got a very different structural deal. You've got OpenAI basically committing to use Helios. That's the rack scale, the biggest, MI 450. That's the top end AMD GPU cluster and rack scale systems. And they're going to build out, and then they're going to get stock warrants. They're going to basically get warrants, and they're basically, as AMD's valuation grows, OpenAI's, the value of the stock they're going to get, the grants they're going to get for building out with AMD go up. So it's a really interesting, very unique and different way to approach this. And the most interesting thing may be that NVIDIA could end up owning part of AMD because of its ownership now in OpenAI. So there is a big circle going on. But that doesn't mean the demand isn't real.
After AMD landed a huge processor deal with OpenAI, Nvidia's stock dropped. Despite growing competition, analysts are still generally optimistic about Nvidia. AMD's collaboration with OpenAI portends a fiercer competition for supremacy in AI chips. Following rival Advanced Micro Devices' announcement of a multi-billion-dollar deal with OpenAI, which heightened competition in the market for artificial intelligence chips, Nvidia's stock fell on Monday. While the S&P 500 and Dow Jones Industrial Average increased by 0.4% and 0.2% respectively, Nvidia's shares fell by 1.5% to $185.41. In comparison, AMD's stock rose 32% after the deal was announced. OpenAI has committed to buying 6 gigawatts of AMD chips as part of a computing agreement that AMD and OpenAI jointly announced. The order's size demonstrates OpenAI's attempts to expand its chip suppliers beyond Nvidia, whose goods have long dominated the market for AI technology. The deal could be a game-changer for the competition for AI semiconductors. Large tech companies like Google and Amazon have already started making their own chips, and OpenAI has expanded its supplier base by partnering with Broadcom for $10 billion. Nvidia's near-monopoly position in high-performance AI hardware may be further undermined by the AMD partnership. Analysts are still optimistic about Nvidia's stock. Even after Monday's setback, analysts are still generally optimistic about Nvidia's future. Out of the 66 experts FactSet polled, 60 believe the stock is a buy, 5 believe it is a hold, and only 1 says sell. Ben Reitzes, a Melius research analyst with a buy recommendation on Nvidia, increased his price objective from $240 to $275. Reitzes has expressed optimism that Nvidia's continued investment in AI infrastructure will support the company's long-term success. He claimed that OpenAI is frightening all of the hyperscalers into investing in order to attain digital superintelligence. Not even Microsoft, aside from Nvidia and Apple, can allow Sam Altman to triumph by spending more money in the Mag 7. Prior to its earnings announcement on November 19th, KeyBank reaffirmed its overweight rating and 250 price target for Nvidia. With a third-quarter revenue prediction of $56.3 billion and earnings per share of $1.28, the company anticipates that Nvidia will produce better-than-expected results than the consensus estimates of $54.5 billion and $1.24. As production yields for its GB series racks have above 85%, KeyBank also predicted that Nvidia will supply roughly 30,000 racks this year, including 10,500 in the third quarter and 14,000 in the fourth. While keeping its buy rating, Goldman Sachs increased its price objective for Nvidia from $200 to $200. Nvidia's strategic alliances and investments, such as with OpenAI, could add significant upside to its 2026 earnings projections, according to analyst Toshiya Schneider. Schneider emphasized that growth would continue to be driven by Nvidia's solid foundation, as well as demand from new corporate clients and hyperscalers. We continue to see the hyperscaler revenue contribution dominating the company's revenue mix, and we anticipate near-term strength in Nvidia's fundamentals driven by upside from both hyperscalers and non-traditional clients, he stated. The majority of analysts think Nvidia's market leadership and ecosystem benefits will maintain its dominance in the AI hardware area for the foreseeable future, even though AMD's agreement with OpenAI may herald more competition. Lawyers and even investors may have to reconsider everything in the next 10 years due to Nvidia. In an interview with Brian Sozzi, Jim Cramer, head of CNBC's Mad Money, revealed that Nvidia would be creating a chip reasoning platform. Let me tell you what I believe, which may be better than what you're thinking, will be the next one. The logic one is the major breakthrough. Cramer, who was one of the first to promote Nvidia when it was still disregarded as a manufacturer of gaming chips, claimed that if Nvidia succeeds, its chips will be able to make decisions with far fewer mistakes than people. That chip reasoning platform has the potential to disrupt non-technical businesses. He compared it to the discovery of dark matter by astronomer Vera Rubin. Using law companies as an example, he pointed out that the system eliminates the need for the fourth-year associate. In order to emphasize his strong belief in Nvidia, Cramer called his dog Nvidia in 2017. During that period, Cramer and Sozzi collaborated at The Street, a business news outlet that Cramer established in 1996. Cramer remarked, "I couldn't get people to focus on it. By the way, that was too ridiculous for anyone to believe." He was convinced that Nvidia was more than just a gaming firm after visiting CEO Jensen Huang's office. He called early examples of artificial intelligence producing scenarios for theater, art, and even restaurants inconceivable. Huang encouraged him to speak up for Nvidia at the time. Cramer remarked, "I just saw it with my eyes. I will advise people to purchase this stock." "Are you a fool?" "Invest in Nvidia." "Nvidia," he said. However, investors are more interested in what Nvidia will do next than in what it has accomplished over the last 10 years. About the last 5 years, shares have increased by about 1,300%. Additionally, Nvidia can experience pressure to enter into licensing agreements in order to abide by legal requirements. Citing the conflict over training data, Cramer said that Nvidia must begin negotiating with the New York Times. Cloudflare is a great stock because of this. Web security services are offered by Cloudflare. Cramer's 7th book, How to Make Money in Any Market, is being promoted at the same time as his presentation. Similar to his Nvidia anecdotes, Cramer said the book combines financial lessons with stock-picking tales, but he acknowledges that it's not always possible to name a business like Nvidia early. For the time being, Cramer is reiterating his assertion that Nvidia may undergo even more change in the upcoming 10 years. He contends that it's not too late to purchase Nvidia, but it's unclear if investors should take his best pick. In 2025, neither AI nor its poster child, Nvidia, took weekends off. Its wild quarterly run, which has been nothing short of explosive, serves as an example. Its supremacy in AI infrastructure has been highlighted by 4 quarters in a row of earnings beats. In just 3 quarters, revenue jumped by a staggering 33%, from $35 billion in FQ3 2025 to $46.7 billion in FQ2 2026. With sales surprises reaching $1.9 billion and EPS beats ranging from 4 to 6 cents, each report easily exceeded Wall Street's forecasts. The incredible streak points to insatiable demand for Nvidia's data center GPUs on the back of global AI build-outs by hyperscalers and tech giants. The market has also obviously taken notice. Clearly, the market has also noticed. Nvidia quickly reached the $4.5 trillion milestone, so July's $4 trillion milestone wasn't the only one. The fact that shares are up about 40% so far this year supports a longer trend in which it has topped the S&P 500's performance tables for the previous 10, 15, and 20 years. Goldman Sachs has made a new recalibration to match that trend. The largest bank on the street is arguably increasing the bar, but it's also making the inquiries more pointed this time. Therefore, if 2025 was about the potential size of AI, the following act will be about the engine's operating time. Goldman Sachs recently raised its price objective for Nvidia from $200 to $210, keeping its buy rating because it anticipates that the AI revolution will continue to fuel future growth. That also implies about a 12% upside from its Octane 3, close at $187.92. Analyst James Schneider said Nvidia's growing network of AI partners is fueling demand for its ubiquitous GPUs. He emphasized the consistent momentum that will continue over the upcoming year as hyperscalers intensify their efforts to build AI infrastructure and next-generation Blackwell chips become available. But the note wasn't all cheerleading. Schneider also warned of a potential risk of circular revenue, where Nvidia's own investments in AI firms may come back as chip sales, which makes the top line appear stronger than it really is. Goldman's caution regarding deceptive top-line revenue is consistent with previous big tech trends. Think Microsoft's funding of OpenAI, which is tied to exclusive Azure usage, or Amazon's $4 billion stake in Anthropic, paired with AWS and Trainium commitments. Such partnerships can effectively inflate short-term sales by layering investment money back as sales. Nevertheless, Goldman Sachs continues to place Nvidia at the forefront of the AI industry. Also, analysts see product cadence and ecosystem reach as critical long-term drivers. Nvidia comfortably sits at the center of the AI build-out. Its iron grip isn't just about chips, it's the full stack, including GPUs, networking, and CUDA software in which developers already live. That powerful positioning is reinforced by its recent quarterly showing. In Q2 FY26, Nvidia posted a whopping $46.7 billion in sales, with $41.1 billion from data center, as Blackwell data center sales jumped 17% sequentially. Management also reiterated a healthy margin profile in the mid-70% range while adding $60 billion to buybacks, showing confidence as the product cycle ramps. Market structure tilts Nvidia's way as well. Estimates peg its AI GPU share at over 90%, led by CUDA's massive developer base and switching costs that limit migration to its peers. Moreover, Citi now sizes AI infrastructure spending at an eye-popping $490 billion in 2026, backed by a multi-year runway through the decade. Additionally, TrendForce expects 20% plus growth in AI server shipments this year and states that Blackwell will account for 80% plus of Nvidia's high-end shipments this year, highlighting the rapid platform transition supporting unit growth, even as prices normalize. Key takeaways on Nvidia. Q2 FY26, Blackwell chip sales increased 17% from the previous quarter, and revenue reached $46.7 billion, of which $41.1 billion came from the data center. Profitability. Gross margins guided to a superb mid-70% range. Market share. Nvidia controls roughly 90% plus of the AI GPU market. Industry outlook. Global AI capex projected to jump to $490 billion in 2026, with AI server shipments up over 20% in 2025. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
When we think about the valuation of OpenAI, it just hit, $500 billion. Do you look at that as justified, or do you look at it and think another bubble could be forming?
This one I struggle with. When you know that OpenAI's valuation surpasses so many companies, very legitimate companies that lead industries, entire industries, you start to say, wow, is there a bubble forming? But then at the same time, when you see this insatiable demand, this insatiable need for AI, you see how fast the revenue is growing, and you look at the alternatives. I shared something on X the other day, and I said, I think OpenAI is setting up to be the first $1 trillion IPO. I think it will be $1 trillion when it goes public. And it's all based on what people believe it can do in the future. And it just shows how much more the market is forward looking. Other industries still have so many questions about what their long-term looks like. AI seems to be the one industry that everybody agrees that there's going to be this incredible demand, this incredible scale, but there is exuberance right now, for sure. There's a frothiness in the market that I think everybody has to at least be realistic that there could be a big pullback at some point.
I was going to ask about that, really kind of stepping back and thinking about the overall AI trade. It's really been powering this market higher. Are we due for some consolidation, or do you think the fundamentals are there for it to continue to run?
Not all companies are created equal. We have a $583 billion AI infrastructure forecast over the next 5 years. That means that Nvidia, that's a little bit over 100 now, we think they could see 300 to 400 billion by 2029. So if they're worth 4.5 trillion now, should they be worth more than 5 by then? There's an argument to be made. Now there's other companies though, you've got software companies, SaaS companies that have been sort of beaten down. You've got a number of companies that were kind of waiting and saying, what is their AI play? You got all the hyperscalers that you're kind of saying, can Google make the pivot? I've said yes in terms of their search. Can it become AI? And then can they monetize that? Can Microsoft, which doesn't have its own infrastructure yet, wants to build its own infrastructure, build out a compelling model? But look, their earnings have basically been good. We thought maybe the inflation would be a problem. We thought maybe that the tariffs would be a problem. But each quarter has come and the earnings have looked good. The guidances have been solid. And basically the impact that we thought we might get from the tariffs hasn't shown up yet. And that's still a debate. But if another quarter goes by and earnings look good and all this AI phenomenon continues, where else do you put a dollar if you're an investor when you can do so well